Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, May the 18th, 2013, or 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. Our first two hypotheses are our highest probability, and then our third and fourth hypotheses are our extension days. And I'm bringing that up because yesterday we ran into Hypo 3, which was our extension day. So we basically build Hypo 1 and Hypo 2 based around what we think the rotations are going to be, based within the average true range and the targets within reach. And then our Hypo 3 and our Hypo 4 are generally continuation type scenarios. And then we always throw in once in a while a Hypo 5, which is a outlier. And we don't try to create the hypos so that we've got ourselves hedged so we can say, hey, look at what happened. We predicted this. What we do is we create the plan and the levels we're going to trade so that we have a plan in place. And then once the market shows us what it's doing, then we're not surprised and we're not trying to build a plan, okay, on the fly. We already have a plan in place, and we can simply take the plan and execute the plan what the market is best showing us. Before we get going, this is a subscription service, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and the trades that you can see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, we're just going to veer off quickly for a second here because this, I talk about this a lot in the room during the RTH. And this set up perfectly and a way to look at trading news. And news can be very difficult to trade if you don't know what to look for. A lot of people will wait for the news and they'll take a guess and then they get run over, or a move will be made and they'll chase it, and then it retraces against them and goes beyond what their risk, their maximum risk on the trade. The best way to trade news is based on a three-wave pattern. Okay. Now I traded the news on gold this morning, and basically the news came out right here. The news. Let's just go take a look at see what the news was. So 8:30 foreign securities came out. Expected 17.23 billion, came out at 15.13 billion for Canada, and then unemployment, which was the big one, came out as a beat. So unemployment, good unemployment, should give a spike in the equities and a drop in the metals, and then Philly Fed came out better than expected as well. But we don't really look at these numbers to make a decision. What we do is we wait to see how the market reacts, okay? And we look for that first impulse wave. So on the news, we had 3 ticks up and then the first impulse wave down. And the open of this was 60.80, and we got down to 59.20. I always look for at least an impulse wave of $1 to $1.30 on gold on the news. A lot of times it'll be a lot bigger. Then you wait for the retrace, which is wave 2, and this is wave 2, okay? And the best scenario, and this is why I wanted to talk about this, is when it's a return, the wave 2 is a return to the scene of the crime. And so the news came out at 60.80. And I always try to enter 1 tick in front of the open when we get these type of retraces. This is also a good way to trade gold too during the regular trading hours on the half-hour flips. If you get an impulse wave on a half-hour flip and it retraces, and I've talked about this in the room before, look to enter in the wave of in the direction of the wave, impulse wave, one tick in front of the open if it gives you that setup. And so I entered at 60.70, and then we get the continuation wave. And I took this down. I actually ended up closing it at 58.4 on this retrace right here, simply because I had to come into do the session, and I don't like leaving trades open and unattended while I'm trading. But I mean, it was good. It was a really good quick trade. I got funded for 10 ticks on the first contract. Okay, and then I took the second contract down for 12 ticks or 13 ticks. So, you know, matter of a couple minutes, and I made $230 thereabouts. So impulse, wave 1, retrace, wave 2, enter, direction of impulse on wave 3. And that's just a absolutely perfect example of a 3-wave news trading style. Okay, so that's over. Let's get to our homework. Okay, so first of all, let's take a look at what news we've got coming up. We've got 10 o'clock. We've got Treasury Secretary Mnuchin speaking. I always call him the Munchkin Man. He's speaking, so this is going to be volatile, especially with everything that's going on with Trump and his White House. CB leading index at the same time. These are all Eastern times. 10:30. Natural gas, and then 1 o'clock we've got Draghi speaking, and again this is going to be you know, a market moving, and this is where's he speaking at? I think he's speaking at University of Tel Aviv as everybody comes in for the G20 summit. So just understand that this is going to be prolonged type news. So the market could get volatile, okay, this afternoon as he's speaking, because heck, there's just a lot going on right now in the world. Taking a look at yesterday and results from yesterday. Yesterday we were open auction out of range. We were looking for a rotation up towards the half gap fill and the 87.50. Then we were looking for initiative sellers to step in and rotate us down, okay, down towards the key line in the sand, chop along the key line in the sand, and then get continuation down to the 70 and 69 area. That was our hypo 1. Hypo 3 was the same thing, an open test drive or an open drive. This was an open test drive, and the continuation was a move down to the 64 and possibly down into the 54, that naked microcomposite VPOC. I mean, so this was a clear example of hypo 1 playing out and then hypo 3 kicking in and giving us our extension. Our range yesterday was 29 points. Our ATRs are now starting to expand, and we talked about this beginning of the week. The fact that we are compressing below an average true range of 15 points. Compression leads to expansion, and we got the move you know, on Tuesday. We got the continuation on Wednesday, and we're now starting to see the possibility of critical mass kicking in, and we'll talk about that in just a few minutes. So each day I like to start my morning with a simple candlestick chart. I use my paper money on this computer so that I can just set up some simple charts with moving averages. I use a 9 EMA and 20 SMA. I'm looking for slope and separation, for strength of the trend, where the trend is being challenged, any type of candlestick charts, patterns or chart patterns that I can identify. And I start with a monthly, and I work my way down so that I can get a macro view to the micro view, and I know where we are within each time frame and see if I get any patterns on any particular time frame. Beautiful upward trend for multi-year, challenged at the end of 15, beginning of 16, then we get the continuation. We put in new all-time highs. I don't care what this says. The all-time high is 24.0450. I've got some problems with my paper money lately. And well, I've got same thing on my live account too, so I don't know why. But we've got good upward slope and separation. Trend is intact, doesn't even get challenged until we get below the 2300s to the 2385 area to challenge the trend on the monthly. On the weekly, we had the gap up, we went in, put the all-time high in, and now we've come down and we've taken back all last of the 3 weeks, and we're coming in and we've taken the gap back, and now we're coming in as an engulfing pattern. And if we break the low of this week right here, and the low of this week is 2322.75, this is going to be a major event, because you're going to be engulfing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks of range is going to be engulfed. We are below the 9, so we are challenging the trend. If we break below the 20, we are violating it. And we're into critical mass for this week, and coming into next week, we're going to be looking at the possibility of hitting critical mass on the monthly as well. So we are seeing some weakness coming in, and possible trend change on the weekly. On the daily, we talked about this, that Tuesday on the market profile gave us an excess high. And yesterday I was saying that excess highs can lead to a change of trend. So yes, that's why we shifted, where most of our hypotheses over the last week or so have been to continuation to the long side. Once we put that, you might as well take a look at it. So nobody's, we've got some new people in the room, so I just want to make sure that they understand what I'm talking about. Market profile, basic profile is, excess, okay, on a TPO count. And you've got clear excess on this day on Tuesday, okay, value overlapped, and then we gap down. And what happens when you gap down? Continuation, and we've got a change of trend. And you've got excess as well, okay, on the continuation day. So my hypothesis is still for continuation lower and the start of a downward trend. Will it play out? We don't know yet, okay, but that's what the context of the market is telling us. And understanding context is very important when you're trying to, understand auction logic and volume and market profile. So on the daily, you can see we've broken below the 9 and the 20. Now we do have a naked cross that's going to set up here at 2382. We do have repair work that will be needed to be done. We've got some naked closes and naked crosses and some naked VPOCs above us, as well as a gap zone. So those should be revisited, okay, at some point in time. But right now, with the momentum that the sellers have, I'm looking for responsive buying and then continuation, or balancing down here. Balance leads to imbalance, back to balance. So we have to find out where we're going to balance again. Again, I don't want these homework sessions to be trading lessons, but I want people to understand the context. So we have broken below the 9 and the 20. We are in a possible downward trend on the daily. On the 4-hour, you can see that accelerates, and we've got good slope and separation. We failed to get back above the 9 on the last counter rotation, and then we've pushed back down. We've got a possible foobar, Mr. Sneaky, setting up here on the 4-hour. We do have a naked cross up here in the 92 area, but the trend is down on the 4-hour. 1 hour, look at the strength of that trend. Okay, every time it comes back, it fails at the 20, and the trend is down. We did get a foobar, Mr. Sneaky, technical gap, and we came back up into the 9 and failed so far. So trend is down on the 1 hour. On the 15-minute, or 30-minute, same thing. Downward trend, good slope and separation, continuation pattern. You can see trend, continuation, failure, continuation. Going to the 15-minute, same thing. Okay, losing a little bit of slope, okay, but we still got, a little bit of separation, but we had still the slope, and the most important is we are failing at the 20. And then on the 5-minute, we're going into sideways consolidation. We actually have a inverted cup and handle here. Let's see if this is, let's draw this out quickly. Just see if it's a valid cup and handle. It is valid. On an inverted cup and handle, it's opposite. You don't take the depth of the cup, you take the handle and your extension, and your primary target is a 61.8, and that's giving us a possible cup and handle target at 23.42 below, with extended down at 23.39.75. Now, remember, cup and handles, any chart pattern are patterns, okay, for possible destination. There's rules to trade them, and they can get violated, so don't get caught up. If just don't say, oh, I got to go short because there's an inverted cup and handle. It's a pattern, okay, with a possibility or a probability to play out. So you start looking for trades in those directions of your setups that have proven edge. Always remember that measured moves are simply destinations. You still have to find an edge to trade it towards that destination and know where the pattern is being violated. Okay, so let's move on. So basically, on the larger time frame, trend is still up, but as we move down in time frame, most of the smaller time frames or shorter time frames are going to a negative, a downward trend. Okay, taking a look at the structure. So the large black outline is our overall microcomposite, the balance that we've been in, going all the way back to the gap up day on February the 13th. Our most traded price is 23.5650, or our microcomposite VPOC. We gapped up here, then gapped up, created balance, price discovery higher, created balance, put in the new all-time high, tried to hold value, couldn't hold value, and we gap down, and we come back down, right back into balance yesterday. Basically close around the longer time frame balance. So imbalance, balance, led to imbalance, back to balance, okay, and now we're back inside of this longer time frame balance. I want to do something here. Just give me a second. I want to change this color. Oh, don't do that to me. So you can see the value area. So our value area, okay, that we've been in for so long before we went into price discovery, is from the 79.50 down to the 34.25. What does that mean? It means we are back in value and right back in balance, okay, that we've been trading. It's been a big wide balance area, but it is there. Now, the smaller time frame that created the last price before the break from balance, okay, is down here at the 23.42.25. Where is our target on our inverted cup and handle? Right down in this area. Okay, we have a double distribution within the balance area or the value area, okay, that has undetermined fair value around it. So in these distribution zones, this distribution zone here and this distribution zone here, we have undetermined fair value. What does that mean? It means that we have multiple accepted price areas or high volume nodes in those areas, and it gets choppy in there. But we have a clear, okay, LVN or price rejection between the two distribution zones, and we're trading just below it right now. So 23.50.50 becomes our over underline, okay, or our key line in the sand between the double distribution. I used over underline because we have just as high a probability of coming up into each distribution. My key line in the sand now shifts down to the 23.28.25, because that puts us outside of value and puts us below the distribution zone and puts us into a very thin area of the profile where we can get price discovery and a move down to close these gaps. Again, this shouldn't be lessons. This should be about setting up our day. So 50-50, okay, is going to become our over-under line. Our key balance or target for the day, okay, above that is 56.50, the most traded price going back to February the 13th. There is a shorter time frame, this balance right here, intermediate balance. Its microcomposite is 53.50. This microcomposite VPOC has actually shifted a couple times from 53 up to 50, 55, 56. So that whole area between these two is going to become a slush area. And then our key line in the sand above is the 66.25. We do have to mark the significant breakout candle from this balance. So if you take the high of this candle or the high from yesterday of 83.75 and our low from yesterday of 54.75 and divided by 2, our 50% of the significant breakout candle is 69.25. So we have to pay attention to the possibility. It's right below the 24th VPOC at 70.25. Below us, we've got 45. We've got a naked close here at 47.25. That'll be your first target. And then we've got the 45 and, of course, the 42.50 area. It's going to be a toss-up today whether we get the retrace and hold above the 50-50 or if we fail right off the bat and come down into this distribution day and get another continuation. We are going to gap below the open. We have to get above 54.75. It's not it's not undoable because of the fact that we still have 20 minutes to go. Holy cow, it's already 9 after. Okay, let's take a look at overnight. Our overnight inventory is basically net short about 60%. We were talking about the possibility of a rally up into that 66, 69 area. We got as high as 67, and then we went down and broke the week low that we put in and went down to 44. We now have somewhat of a weak low down here as well. 44 is going to be an important level for us to hold. We did get a VPOC shift down in the last 30 minutes down to the 23.50 area. So you can see this is an example of longer term price rejection becoming price acceptance on the shorter time frame because we're battling a key level between those double distributions. Okay, quickly. So taking our numbers from overnight, our overnight high is all the way up at the 67. Our overnight low is 44.50. Our VPOC is 50. We have a significant LVN at 56.25. I'm not going to use that one. I'm going to use the range low at 54.75. And I'll be targeting into that 56.25 with the move to close the naked close here. We have an LVN right here at 61 and an LVN at 66 with the overnight high just above, and then a move up into the 72. Now here's the thing. Our daily ATR upside target and downside target, okay, is basically already played out. So we can't really use our daily ATR today because off of the bottom of the overnight, our full session daily ATR is running at 1460. So off of the low overnight of 44.50 plus the 1460 only takes us up to 59.50. And overnight, our overnight high is 67, so take that, 1460. We've already expanded, okay, our daily ATR to the downside, and our upside is within the range of the Globex. So we're getting expansion, so these daily ATR targets really don't mean much to us, anymore. So I'm just going to take them right off the chart tonight, or today, because they really don't do us any good. I don't need this, so I've gotten all the information I need from there. Our over-under line, again, is going to be 50-50. I'm actually going to shift it, and I'm going to put it right on the overnight VPOC, because I think that's significant. And our microcomposite VPOC is at 5650. I'll just use this. We call this the magnet because it's the most accepted price. Whoops. Okay, and then levels to the downside. We've got targets at 45, just in front of our overnight low, and targets at 42 and a quarter. And our key line in the sand now shifts down to 28. Oh, and I still have it from before. Things don't change, just where we are in the auction. All right, very quickly. Okay, we are moving up. We're getting into this upper distribution and coming into that first area of 53 and a quarter. So my main hypothesis for the day is either an open auction just out of range or an open auction just in range. I'm looking for responsive buyers to step in, bring us up into this 59 to 62.3 area, and then I'm looking for initiative sellers to step in and rotate us down and come down into the 47, 46 area and close somewhere down here. That's hypo 1. Hypo 2 is an open auction just out in range or just out of range, possibly an open rejection reverse, a push down into, the 46 to 45 area, and then find responsive buyers and start working our way back up towards the naked close the gap, chop around here, and then push up and close somewhere up here between the 66 and 64 area. I'm not expecting a lot of range today as we rest. Now we do have news. So hypo 3 is an open rejection reverse or an open test drive, failure to get into value from the prior day, and then responsive or initiative sellers stepping in and pushing us down, chop around the 50-50 area, fail, come down, chop around the lower distribution, and then push down, and testing the lower side of this distribution with 3450 being a key area. And I'm going to shift this to 3450. That is hypo 3. And then hypo 4 is a take-back day. An open auction, failure to take out the overnight low, push up into the microcomposite VPOC and chop in this distribution, push up into the 66, break through and come back, and come up to our naked VPOC from yesterday. Remember, we left the VPOC from Tuesday. Value is still above us. We have a lot of repair work in this area, some naked VPOCs and naked closes that we jumped over, and we're leaving value above. So the weight of hypo 3 and hypo 4 are pretty much equal, because we could very easily get a take-back day and come back up towards the 50% of the significant breakout candle, which I want to put in there, which is 69 and a quarter. Okay, so those are my 4 hypotheses. I'm not going to do gold because we've gone long today. Well, let me just quickly just take a look at it. Come on. Get out of my way. Where'd my gold chart? So I just close it down. You know what? I just inadvertently closed my gold chart. I'm not going to bother with gold today. Gold is trading in the 59 area. I'm expecting it to chop around in the 59, 60 area. There's your hypo for the day for gold. Sorry, I just didn't want to run this long. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.